Huge news on the healthcare front because of the American Rescue Plan. We got rescued ourselves from the government. Sniffy Joe did come through in this regard, big time. So kudos to him. We should never have been here to begin with, but here we are anyway. So let's read this. This is from Carolyn McClanahan. Could you get any more Irish than Carolyn McClanahan? Anyway, she is a doctor who runs a financial planning firm, I think in Ford or something like that. The American Rescue Plan has some welcome relief for clients who are responsible for retaining their own health care coverage. The biggest news, oh boy, there's probably, hold on a second. Biggest news is that previous ACA subsidies for health insurance were limited to those with a modified adjusted gross income less than 400% of the poverty level. This equates to $51,000 for a single person and $70,000 for a couple, all right, and $106,000 for a family of four. This cliff for obtaining subsidies for health insurance is eliminated for 2021 and 2022. Now, be careful. You're not saying there's no, you're still going to pay, but it's not nearly going to be as bad. For example, let's look at a couple who are both 62, a very expensive age for health insurance. If this couple has a modified adjusted income, a Maggie, remember, Maggie is before you factor in standard deductions. It's not your taxable income, my friends. Modified adjusted gross income is what that's called. They previously, so a couple with a Maggie of $70,000 previously received no help paying for the health insurance and were on the hook for all the premiums. With the changes under the American Rescue Plan, their health premiums are limited to no more than 8.5% of their Maggie. For this couple, the premiums would be limited to $59.50. So their premiums are limited to $59.50, which is 8.5% of their income is $70,000. Interesting. In my zip code, the premium for the second cheapest silver plan for a 62-year-old couple is $24,000. Man. Since their payments are limited to $59.50, this couple will receive a tax credit of almost $18,000. Under the previous ACA rules, they'd get nothing. The credit is gradually phased out as income increases. Unlike the previous credit under the ACA, it isn't suddenly wiped out because they jumped over the income. That's freaking huge, man. To qualify, you must purchase your health insurance at healthcare.gov. The website will be updated on April 1st to reflect a new credit. Open enrollment lasts until May 15th, so you must act fast. On March 23rd, Sniffy Joe announced an extension of the open enrollment period for the Affordable Care Act to August 15th. Oh, that's pretty good. The tax credits apply only for the months a person is enrolled in a plan through the ACA. So the sooner your client applies, the more they'll save on insurance. All right, hold on just a second. A Pablo break. I hope that's when they put the commercials on. Remember, if you don't want the commercials, pay $11.99 for YouTube Premiums. Freaking, once you pay for it, you'll never go back, I'm telling you. All right, so until the credits are reflected on healthcare.gov, your client, you can utilize a calculator of the Kaiser Family Foundation to determine the amount of their tax credit. That's pretty cool. A client can enroll in March to begin coverage in April, but the tax credits won't show up until April. Okay. Ideally, you have a health insurance agent in your area who help you with your enrollment. This doesn't change their cost, but it eases the pain of dealing with the healthcare.gov website. Oh my goodness, just pains me to think about. Let's see. Because of budgetary procedures, these credits are not extended past 2022. However, what the government gives, it can easily take away. Yep. Clients who already see their assistance through the ACA will see slight increases in their premium tax credit. That's cool, man. They might want to reevaluate their plan selection after April 1st to see if they qualify for a lower cost sharing with the new plan. Maximum assistance for unemployment benefit recipients. Anyone who does not have access to affordable insurance through another family member and has received even 1 week of unemployment benefits will be deemed as having earnings at no higher than 133% of the poverty level for the entire year. And will there qualify for a no-cost silver plan. Man, that's freaking smoking deal, man. So if you have, I had a lady, oh boy, there's a station identified break for Finney now. Hold on a second. I just got this email yesterday from somebody, 40 years with the same employer. Hold on a second, let me make it. 40 years with the same employer and 5 years shy of Medicare, and she was just laid off. She has lots of decisions to make, and the big one, what to do about health insurance. Do I have any website or information about ACA? So yes, ma'am, this is perfect for you. Anyone who doesn't have access, all right, we just talked about that. This sounds too good to be true, and is even better than that. A person who claims and receives unemployment in 2021 will also qualify for cost-sharing subsidies that will significantly lower their deductible. All right, so I don't know if I'm not going to say her name. We'll call her Mary. So Mary emails, she just got laid off, 40 years with the same company, 5 years shy of Medicare. And she says, so unemployment, if you even receive 1 week of unemployment benefits, you will be deemed as having no earnings at no higher than 133% of poverty level. No freaking premium for a silver plan, and you also qualify for cost-sharing subsidies that will significantly lower your deductible. For example, a typical deductible for a silver plan for those making 250% poverty level is about $5,000. Currently, the ACA, once one's Maggie is below 250% of the poverty level, the deductible gradually declines. If the income goes down to 100% of the poverty level, the deductible can also go down to zero. Since the unemployed person is considered to not have any income, their deductible would be very low. That's one small glitch is the provision that healthcare.gov will not be able to reflect the credits for unemployment situation until the summer, which is after open enrollment has ended. However, the tax credit will be provided on the back end when they file your tax. All right, so there's going to be some pain, I get it, but man, a potential workaround for those who qualify for the benefit is to enroll now and enter their income for the purposes of the tax credit at 133% of poverty level. This will provide a current tax credit and automatically show the reduced deductibles available. Yeah. It'll be important to re-enter that information once the site is adjusted. All right, cool. COBRA premium assistance. For those who lose employer-based coverage due to job loss or reduction, all right, making sure Chewy McGee over there. The American Relief Plan provides relief in the form of COBRA premium subsidies between April 1st and September 30th. I'm just thinking out loud here. So why would you want to go on if you're laid off? Why would you want to go on to COBRA? Well, actually, let's just keep reading here. All right, so it provides relief in the form of COBRA premium subsidies between April 1st and September 30th for 2021. After September 30th, you can continue your full coverage on COBRA, but at full cost. Yes, right here. This exact, man, freaking Carolyn, but this is exactly my question. If your client loses their job, should they accept this benefit or should they go on exchange plan? Once a client accepts COBRA, they cannot qualify for an ACA plan until their COBRA eligibility ends or to the next enrollment period. Although they will receive COBRA subsidies for 6 months, they'll end up paying the last 3 months of the year if they have not regained employment. But remember, if a person is terminated and claims unemployment, they will receive the maximum assistance for 2021 as an unemployment benefit recipient. They will have no premium cost. For a hassle factor, going on COBRA is the easiest option as your client won't have to access the exchange for coverage. Exactly. However, if they're not re-employed by October 1st, this will be more expensive. Forgiveness of excess tax credit repayment. For people who receive premium tax credits and underestimate their income, normally have to pay back the excess credit they received. Yep. The good news is that excess premium tax credits will not have to be repaid. So why would you? So basically, if you misstate your income and you actually made more than what you stated, you got to pay it back. But why would you do that? All right, if the client has already filed taxes and paid an excess credit, the IRS requests the client not file a amended return. Our healthcare system continue to be expensive and inefficient. Any major legislation requires periodic adjustments to mitigate unintended consequence. With the ACA, the subsidy cliff was one of a few issues that needed a fix. Yeah, you think a few. The other policy change problems by Sniffy Joe is a public option for health insurances. The bear to tackle would be significant opposition from the insurance industry. All right, the freaking. All right, so let's go on to. I'm going to go to the Kaiser thing right here. I'm not sure what's going to say. Cost of now this count. Okay. All right, good. So we're going to say we're in Georgia. And we're going to say our income's we'll say $150,000 for simplicity. Oh, enterprise zip code. What's my zip? What's my zip, man? I'm drawing a blank. What's my zip code? Hold on just a second. So many places I forgot. So there it is, 30004. All right. We got 3 adults. No, I guess Maddie's not really an adult. All right. Oh, we got more than 2 adults, man. No, age. I'm 50. The beautiful is 46. Neither of us use tobacco. Number of children. All right. Age 20. Finney, would you stop that? 16. Oh, low battery. Okay. Gotta go change out because we gotta make sure we don't lose all this. All right. And then we got age. Let's say 12. No tobacco. No wacky tobacco. All right. Let's see what else we got. Boink. All right. Plug it in. There we go. And we're going to say yes. Number of people in family, 6. If coverage, no. Enter our yearly household income. Enter income is, we'll say 20. Okay. Select county, full. Okay. Let's see what happens. You're likely eligible for help. Yes. Yes. All right. So let's just say there's no kids. And let's just say it's 1 person. Let's just say 2 adults. There you go. Hubby and wife. And we're going to say no. And we're going to say 90,000 here, just to mess around. Yeah, we're eligible for help. Your income is 522% above poverty level. Yeah, 506 a month. Take that, Obama. So 8.5% of income. All right, all right. Let's say we were. Oh, right there. You're likely eligible for financial help. We'll get a silver plan with no premium because you got to. Dude, that's freaking fantastic. Look, I hate it. I hate it. I hate it all. Stupid. The money just falls from the money tree. It's fantastic. But this is what libertarians piss me off. Like, how dare you take from the government? Are you a freaking idiot, man? That's like saying don't take your GI Bill. It's your freaking money. It's our money. It's ours. It's ours. You take back what the government gives you. Use the tools of your enemy to fight the enemy. And the government we're enemies of the state. So you use the tools of the enemy to fight the enemy, man. And this is a tool of the enemy. We didn't create the law. It was created on us. If you're not, the whole libertarian argument that, oh, no, don't take, it's freaking dumb. I remember one time someone called in Rush Limbaugh, and it was actually weird. Some guy said, look, I got to get, I don't know, he wanted Medicare, whatever. I forgot what it was. And Rush Limbaugh said, this is part of the problem. And I said, and I was like, I'll never forget. I said, well, Rush, that'd be like saying you're not going to use the tax code to eliminate your tax burden if you can. I mean, the facts are these are the rules that we're living on, not to take advantage of it. It's just stupid, man. It is. Now, people say, well, Josh, how do you say that with Medicare? I remember my man Sergio, and I love Sergio, very upset with me when I said, yeah, I don't think you should hide assets to pretend like you're poverty so you can qualify for Medicaid. See, that's not the same thing. That's then what we're doing here. Here we're just doing what the laws are. What you're doing in that regard to hide assets to shield you from so you can qualify for Medicaid is you're lying to say, hey, I'm going to get this, I want to get subsidies. And essentially what you're doing is you're telling somebody else who really has no money that they have to pay so you can get in for free, even though you have the assets and the wherewithal to pay it. That's different. That's, we have tax evasion and tax avoidance. Avoidance is fine. Evasion is not. And evasion is against the law. Avoidance is not. Anyway, good stuff. I will see you.